Now, relative to it being accessible to the ultra rich, nothing could be farther from the truth. Commercial properties, I have one transaction that I'm involved in today, which is a 6-unit commercial purchase. The purchase price on that is $205,000. That is not necessarily an investment for the ultra rich. It cash flows really, really well, and we'll probably talk a little bit more about that. But to answer your question, commercial is not for the ultra, the super rich. It's for middle America.
Welcome to today's episode, where we dive into the world of commercial real estate financing with Richard Kimball, a seasoned mortgage broker and a real estate investor. If you've ever felt overwhelmed by the idea of getting commercial mortgage, or even wondered what's stopping you from taking the next step, this episode is for you. Let's break down the limiting beliefs and common challenges high value professionals and entrepreneurs face when considering commercial real estate investment. Rach, for joining us today again for the fourth episode. I really appreciate your time. Today, we are going to look at commercial lending, right? And in this episode, we are going to first look at some of the common myths, right? Beliefs about commercial lending that may not be necessarily accurate or true. And then maybe take a look at some of the challenges that comes with these beliefs. Now, if you can give us a 1 minute intro, that would be great. I know you've been on the podcast before, and some of the audience or some of the listeners are probably this is going to be their first episode. So can you tell us a little bit about you?
Sure, I appreciate that a ton. Thank you and I'm honored to be here again, Patrick, because I really, really appreciate that. Myself, I've actually been in the mortgage lending business over 30 years. Actually, it is close to 40, but we won't get into that. I start dating myself a little bit. On the residential side, for sure, over 30. Got involved in commercial lending back in the 90s and got a really nice exposure. Some of my clients needed that, and we're always trying to provide more services to our clients. So interestingly enough, as we talk about commercial today, the need for somebody like myself, which is I operate as a commercial loan broker, the need for somebody like myself has never been higher. Banks today are in a little bit of a pickle with regards to lending. And because of that, borrowers need better direction of which banks are lending, and B, are lending for the type of commercial loans that they're trying to get. So we're in a really good place right now, and I'm really happy that we have this forum to talk about it.
That's great. So let's start off by my first question will be, when it comes to commercial lending, is it really for the ultra wealthy investors, or can high value professionals or entrepreneurs also make the leap into commercial in real estate?
Sure. It's a great question. Let's define what commercial real estate is, though. I think that's a great place to start.
Okay.
Commercial real estate is anything not considered residential. Now, that may seem obvious, but let's get into specific descriptions. A commercial rental property that houses families is going to be a property that has 5 units or more. So a 6 flat, a 12 flat, a 10 flat, those properties are considered commercial. Why? Well, Fannie Mae and Freddie Mac only do residential 1 to 4s. Everything north of that falls under the commercial umbrella. But commercial's got a bigger umbrella than that, because commercial also talks about strip centers, talks about mixed use properties, talks about industrial buildings, talks about office buildings. All of that is classified under commercial. Now, relative to it being accessible to the ultra rich, nothing could be farther from the truth. Commercial properties, I have one transaction that I'm involved in today, which is a 6-unit commercial purchase. The purchase price on that is $205,000. That is not necessarily an investment for the ultra rich. It cash flows really well, and we'll probably talk a little bit more about that. But to answer your question, commercial is not for the ultra, the super rich. It's for middle America.
With that said, when it comes to my non-US persons, do they also qualify for commercial mortgages in America?
Yeah, it's a little trickier there. And so there's a couple definitions when we start talking about those non-US citizens. So certainly somebody with a permanent resident alien card is going to be able to go to a bank or credit union or seek out somebody like myself to place them into one of those institutions. On an I-10 borrower, somebody who doesn't have necessarily a green card, but has an I-10 number or maybe a work visa, that does get a little trickier. There are lending opportunities for them on the commercial side. So there's some lending opportunities there on the commercial side for them. They're very limited. They definitely need to seek somebody like myself, and they need to seek us sooner than before they find the property, because there's a very limited number of lenders that'll do that. Lastly, we have something known as the foreign nationals, and those are going to be folks that actually have full-time residency abroad. That's an even tougher place to go and get some loans. But again, if they seek somebody like myself, we can potentially find them someplace, or at least send them in the direction where they can get some assistance.
So would you then say that it may be advisable for them to work with a US person who is also an investor, probably to partner with them for such a mortgage or for such an investment?
Partnering with somebody here in the States would be certainly very helpful for a foreign national. Even for somebody, partnerships are certainly good to bring somebody who's inexperienced in commercial, matching them with somebody who's experienced in commercial, because it is one of the things that an underwriter for a bank or a lender will look at. They want to know what the person's experience is managing a building or managing that. That's a really important part.
Right. That makes sense. So I know you've touched on some of the misconceptions, right? In terms of whether high income clients or individuals can, qualify for commercial mortgages. Is there any other misconceptions that you've come across when it comes to commercial loans?
Yeah, I think the biggest thing. So when we start out talking to somebody about a commercial property, and I want to specify this would be a commercial property where the buyer's not intending to put their own business into the commercial property.
Okay.
So if we're talking about a commercial property that is a 10 flat, is an industrial property where their intent is to buy it, rent it out to other people, a strip center, let's say. In those cases, the minimum down payment on those properties is typically 20%.
Okay.
So that's a big thing for people to know, is it's 20%. Now, if they're going to put their own business in there, we'll talk about that in a second, but I want to stay on the true investment properties. So we've got 20% down. The other thing that's a misconception is that for the most part, I would say 90% plus of all the lenders, the terms are this: it's a 5-year balloon or a 5-year adjustable with a 25-year amortization. So that's significantly different than when people think residential 30-year fixed. So the terms are definitely a little bit different. Now, we want to talk about commercial as it pertains to somebody who's going to buy the building and have their business occupy at least 51% of the building. That's going to be something that qualifies under Small Business Administration. The SBA will make lower down payments available to those folks, specifically under the 504 program. They'll do something with as little as 10% down. And under the 7A program, they would be as aggressive enough to do 0% down. Now, I want to put a big asterisk on that 0% down. The reason why it's not as popular, and most people are like, wait, what do you mean 0% down? I can move my business? That's amazing. The interest rates on that 0% down through the SBA are double digits.
Whoa,
so most people are like, whoa, I had one quoted last year at 11.75. So it's
Okay.
some really expensive to buy a building and not put any money down.
It's really interesting. So for the SBA, as you stated, we are looking at least 51% business use, right?
Correct.
What if, so let's say, for instance, I purchase a right mixed unit in the sense that I have a storefront and maybe 3 or 4 units, right? Actually, let's go with 5 units.
Sure.
Actually, I'm trying to get them. So, what I'm trying to arrive at is what if my business is going to use less than 51%?
Well, then it's just not going to qualify for an SBA loan. So
Right.
then you're going to you'll fall into more traditional financing. And the more traditional financing basically asks for 20 to 25% down. I want to say one thing about the 51%, though. So your
Okay.
typical Chicago building, and we're here in the Chicagoland market, your typical
Right.
Chicago building is a rectangle. So the bottom part of it is a storefront, and the
Right.
top part of it is apartments.
Mm-hmm.
Now, in that example, the square footages are the same because they're just laying on top of each other.
Mm-hmm.
How do we get that extra 1% out? Well, couple ways to do it. We could state the garage is going to be exclusive to the storefront owner. We
Okay.
could say that the basement is going to be storage for whatever businesses in the retail of the commercial space. Both of those things are bridges to the 51%. So there is a way to squeeze out that 1% and make it possible.
Okay.
But ultimately, you take that same building and you stack another row of apartments on the top of it, it's just not going to go SBA.
Okay. So we've talked about your business occupying 51%.
Mm-hmm.
So there is this other misconception that I've heard numerous times, and I've even had clients ask, what if, going back to the example you gave, the 6 units, what if I buy a 6 unit, but plan on maybe renting 1 unit to a family member or me staying there since it's my investment property anyways? Is it even allowed?
Yeah, you can move into the 6 flat, of course.
Okay.
It doesn't change how the lender looks at the financing.
Okay.
The fact that you're going to live on site doesn't really change that. It doesn't change that. You living on site doesn't add that extra 1% that you might need to get to 51% occupancy for the SBA. So that part doesn't help. But certainly if you want to buy it and live in it, and we'll get into this later, I believe, the key to the building is cash flow. And
True.
that's really the key to all commercial lending.
So with all that said, what are some of the financial risks that you are aware of that people usually face when it comes to how they approach commercial financing without having the right knowledge?
Oh, that's a great question. First things first is certainly figure out any residential or any real estate purchase. You got to know where your money's coming from, and you got to know what your budget is. So one of the mistakes that I see made is that people go out shopping, but they don't even know if they can pull off the transaction. So let's take just an investment property. Let's say we have somebody that's got a couple single family homes. They're looking to take that next step. They want to buy a 6 flat. So a typical 6 flat is going to require 20 to 25% down. First thing we need to figure out is, do you have 20 to 25% down for that purchase? And then back that out into the purchase price. Your purchase price most likely will be more limited to the amount of down payments you have than what the payments are going to be. Now, the reason I say that is because the lenders, we talked about cash flow, and this is a really important part of commercial. The 70% or more of the lender's decision to make that loan is based on whether or not that property cash flows.
Okay.
So if your buyer, Patrick, that you're showing homes to or properties to, multifamily residential, has enough to put 20 to 25% down on a $2 million property, as long as the rents that are coming in on the $2 million property support the mortgage, you're approved for $2 million. It's all about the cash flow.
So it's interesting you said that. I've had clients in the past that wanted to purchase commercial properties, right? The most common ones are, I guess, churches. We did talk about pre-approval letter on our earlier episode, right? And the importance of it. One of the things that I've come to learn, especially when it comes to churches, is that since they depend solely on donations and offerings, right? Sometimes it's very difficult for them to even know how much money they are bringing in. Because going back to your point, the down payment is going to be a factor, right? So for entities like churches, what are the requirements different or the same for just maybe an individual with a business coming to purchase a commercial property? Because from my understanding, usually when it comes to commercial properties, it has to go under an entity, a business, a registered business. Is that also accurate of a first statement?
So commercials are very specific. I'm sorry, churches are a very specific lane. It's not one, honestly, I spend a lot of time on there
Okay.
because I find a lot of the folks that approach me don't really, they don't understand enough about the financials of their own church,
Yep.
and they don't really know who's actually going to sign on the dotted line.
Yep. Yep.
And that always, when we cross that bridge, get to that bridge, nobody really wants to cross it. Well, wait, I'm not signing for the mortgage. Well, wait, we don't know what our finances are.
Yeah.
And so
Right.
those things are restrictions. I would say relative to church financing, if you sought me out, I would immediately refer you to somebody that actually specializes.
Okay.
That's just one thing that we just haven't had a lot of success with, and
Okay.
it's very unique lane relative to churches.
So my other question will be, an individual purchase a commercial property under their name, or it has to go under a business name?
You did ask that. The business name, ideally, there's an LLC entity that's going to own the building. In
Mhm.
most financing, and especially the SBA,
Okay.
there's still going to be personal guarantees. So even though you've set up 123 Main Street Corporation, that's fine. And it's 123 Main Street is the building we're buying, but the actual people will still have to personally guarantee. It's called non-recourse lending. There's
Okay.
not a lot of that available anymore.
Okay. That makes sense. So is there anything else you would like to add when it comes to the misconceptions and some of the challenges that you've come
Yeah,
across?
for sure. Two things that we'll talk about. One is the cost. So an appraisal on a commercial property is significantly different than an appraisal on a residential property. Typically, you start at about $1,200 and you could go up from there. Seeing appraisal fees of $3,000 or $4,000, depending on how complex, how big the property is, going to dictate the appraisal on that. So appraisal fees are a little bit different. There's also something called EPA, which is short for Environmental Protection Agency. That's another due diligence that most likely is going to be done if the property was ever at any point involved in chemicals, next to a gas station. Maybe even in Chicago, they had an old fuel source for the boiler, and maybe there was a fuel tank buried into the foundation that used to actually supply the fuel for the heating source. So there's some things. As a buyer, I wouldn't want to buy a property unless I had an EPA done. A phase one EPA is typically $1,200 to $1,500. And what it will protect the buyer for, Patrick, is that they buy the house or the building, and they find the building's got maybe one of the tenants before was dumping motor oil through the sewage system, and now all the soil underneath is dirty. That's the owner of that building's responsibility to dig all that up. And in most cases, you're talking about a 6-figure fix. It's not cheap.
So it's really interesting you brought that up because when you're looking at the residential part, right, usually we'll do the normal home inspection. From what I'm hearing, in addition to the home inspection, you want to do the EPA inspection on top of it, right?
Yeah. Well, the bank's going to require it. So the bank's going to require it. So I've got a transaction right now. It's a multi-unit, it's a 12-unit property. It's never been anywhere near anything commercial. It's in the middle of a residential city block. They're going to do just a quick review of the public records to make sure that there was nothing on that property or nothing around it. That record check could be a couple $100. But if it triggers something, like maybe the 6-unit building, and it doesn't have to be the building itself, but if the commercial property is next to a gas station or next to a commercial property where somebody might have had a dry cleaner in there, that's a red flag. Gas stations, so the proximity of the building to wherever these other environmental threats are could be relative to.
That makes sense.
There's
one. Sorry, go ahead.
No, that's okay. You asked about the differences. So we wanted to talk about the inspections. The other difference too is the pre-approval portion of it. So we can look at a buyer and say, you have enough money to buy up to $2 million or $600,000. Can I pre-approve them for that specific building that you have now found them? No, because what I need to figure out on that building is, does the building cash flow? As strong as the buyer might be, if the building doesn't cash flow, bank's not interested, period. End of story.
All right. Okay. Makes sense. Okay. Thank you so much for shedding light on the myths and the challenges that I know hold us back to take the leap into the commercial lending space.